Well, the data are very encouraging again. We are even in services, we are at the best level since 2007. This is very good. Of course, we need to watch the risks from Delta, but for now, the evidence shows, as it did last summer, once there is reopening of economies, activities switch back fast. And consumers want to spend money, they have the money to spend, and economies are rebounding rapidly. Risks are there, but so far they are not materializing to an extent to really thwart this rapid recovery.
Holger, when we get a stronger set of data that crosses, it starts to provoke some concerns with the inflation hawks. And even over the weekend, we had Klaus Knot over at the Dutch Central Bank talking about the fact that inflation is not dead, in his opinion. We've also had Jens Weidmann recently commenting about some of the hotter inflation numbers. I know you're also looking for stronger signalling to come through on pricing pressures in the second half for Europe later this year. But can I just ask you, what's the relevance of the signalling function from the United States here? Because even if you look at some of the data points, second-hand cars and trucks, you're starting to see that increase at a slower pace. So could we see the United States give us a little bit of comfort, even as stronger inflation numbers cross later on this year?
Well, the US have been a significant concern on inflation so far this year, and on underlying trend, they remain a significant concern. But indeed, markets have noticed that there are inflation issues in the US, and I consider it fairly likely that the inflation issues in the US for markets are now, by and large, priced in, not fully, but at least to such an extent that a modest reprieve here and there, headline inflation may decline in coming months a little, that will add up to the following view. Yes, central banks will have to react to growth and inflation beating their earlier expectations, but they are unlikely to react to such an extent that they will derail the recovery. If they will merely tell us step by step, they will take the foot off the accelerator as the economy has already accelerated. And this, I think, is something that should not, despite occasional irritations, be bad for markets. So by and large, despite central banks having to probably taper a bit earlier than they themselves thought a while ago, I don't think this is really negative for the overall direction of markets. Inflation is being discussed a lot, but it's good that it has been discussed a lot. So the numbers we are seeing are not coming as a surprise.